Hello, how's it going?
Very well, Tiago. How are you?
Man, I don't even know where to start this week, right? It was looking like we were going to have a nice, tranquil week, and then about what, two days ago, everything just started blowing up.
Did I find this is the fascinating bit about doing these Bitcoin Pulse episodes because for most days you think there's nothing going on. What are we going to talk about? What are we going to talk about? What are we going to talk about? There's like, oh shit, how are we going to cover everything?
Yeah, yeah. Oh man, what a week, eh?
It has. Big story today. Well, yesterday as well. Um,
Go on then,
Banks, isn't it?
let's kick it off. What's
Yeah.
going on?
Now you tell me. Looking at the Silvergate bit, which seems to be the one that's standing in front of us, isn't it? The elephant in the room.
Yeah, so Silvergate has announced that they're shutting down. This lends itself perfectly to the anti-crypto narrative that we're seeing amongst a large amount of in Congress in the US, right? Which is that crypto is unstable. Crypto just allows people to skirt the law, money laundering, crime, etc., and it's taking banks down. And so hence why they should really try and isolate the traditional banking system from crypto. So that's the story everybody's hearing. The reality, of course, isn't actually anything to do with that. Silvergate failed due to poor management strategy, unfortunately. So I think in order to understand why Silvergate failed, I think we just need to generically, very, very high level, explain why banks fail and what it is they do. So the very simple explanation is famously known as the 363 rule, whereby banks borrow at 3%, they lend it out at 6%, and they're playing golf by 3 p.m. And essentially that's what banks try and do. So they'll take depositors' money and then they'll lend that out at higher rates. So that's how banks, at a very high level, try and make money. Now, Silvergate was interesting because Silvergate was one of the few banks in the US that was willing to touch crypto companies. Now, what that means is because there's relatively few banks that are willing to go into that space, as soon as a bank is open-minded about it, a large proportion of their depositors tend to be in the space. And one of the other reasons Silvergate grew so big was because of the Send network. Now, in the US, it's very archaic. Banks still only work Monday to Friday, right? So there's no banking facilities on a Saturday or Sunday. Now, this is incredibly problematic for crypto companies because their primary market is open 24/7. Crypto doesn't care if it's a Sunday afternoon. Crypto's always open. Added to that, then, that your depositors can just withdraw their funds at any point. Well, if you've got a bunch of depositors trying to get their money out on a Saturday afternoon and you're a crypto exchange and the banks are closed, you're in big trouble. So what Silvergate did was they created the Send network. And what that did was it allowed depositors in Silvergate to transfer funds amongst each other 24/7. Now, this was huge for the crypto firms. And so it created huge network effects, right? So because this only works, remember, if everybody's inside Silvergate. So you can transfer funds from A to B on a Sunday afternoon if both are banking with Silvergate. If somebody's elsewhere, it's not going to work. So there was a huge network effect, which really made everybody getting in on Silvergate.
So yeah, that's a really good point, Tiago, because it's not just that Silvergate created this network that could work 24/7 to match up with the crypto exchanges, which were working 24/7. It only worked if you were, as you said, part of the Silvergate network. So the network effect happened because it was the only bank providing you with this 24/7 service, so to speak. And they all were basically almost pushed into joining Silvergate's network. So they could transact with each other all the time without any restrictions on when and how money was transferred and which days the banks worked. So that was a good bit. The interesting bit was, until now, it was fine. And Silvergate needed a lot of these banks, a lot of these exchanges and crypto companies to put the deposits with them. and which they did. And I think that changed how Silvergate functioned initially from being a traditional bank and realizing they were getting so much investment from crypto companies and crypto exchanges that they changed their model to become more crypto based. And I think that's where the twist happens. Because although they changed their working model with the Sen network and they focused on crypto companies, one thing I think which they are being held at fault for is that with the money, what they did was very unlike what a crypto bank should do. And what they did was what a traditional bank does. Now, people are arguing that that is a management fault and this, that, and the other. But I'm not sure. I wonder whether that is just the way the management had always functioned, because it still was a traditional banking system initially before the.
So let's delve into that. So then explain to the listeners what it was they did.
So from my limited understanding, and is that when you get deposits, you don't hold them in your computer or your vault and what have you. You have to put that money to use. You don't have to. You can keep it as deposits, which is exactly what Caitlin Long's Custodia Bank was promising to do. And they said, okay, fair enough. We'll whatever deposits we've got from the customers, we'll back it up to make sure we've got 108% liquidity of those deposits available to us at all times. Now, what Silvergate, I think, did was they were sitting on this money and they should have just let that money sit, because they were not paying any interest on that money to their depositors. And they still went ahead and did what the traditional banks did, which is they invested in long duration bonds, long duration treasuries. So main thing was that basically all the deposits Silvergate held were instantly redeemable, as most banks do, which is nothing different. But they were also redeemable over the weekend. And Silvergate had decided to invest these into long duration T-bills or bonds. And what that meant was that would have been fine. You can sell those and you can pay back the money that you owe the depositors. But the interest rates have been going up. And basically, to put it quite simply, when the interest rates go up, the value of the bonds you hold goes down in a very simplistic fashion. And why is that? Because let's say the bond is paying you 2% and you bought it for 10 years. And suddenly the new bond that has come up is now offering you 4%. So why would anybody want to buy the 2% bond off you? So the way they would do it would be, as long as you make good the difference of the 2%. So they will pay you the discounted value so that they are still whole by buying your bond. So you effectively take a loss on the sale price of the bond that you're selling when the rates have gone higher than you bought them at. And it works the other way around. If your bond rates were higher that you bought and the rates were going down, then you can make money because people want to buy the older bonds which have got a higher rate of return. So that's a simplistic view. Now, what happened was Silvergate were faced with this problem. They bought these bonds. The interest rates went up. So the value of the bonds that they had was now much less. Plus, there was a semi-run on their deposits, which meant that they had to sell this quite quickly. So they took a loss haircut on the bond sale, which they also did due to FTX, because FTX was the first time they had to sell, wasn't it, Tiago? Just after the FTX collapse, when people came running for money there.
Yeah, were they involved in the Luna thing? Or
That's it, the Luna thing. Luna, yes, yeah. Exactly. So, but they made that whole. They made them whole. All the depositors were made whole, and they took a huge loss. But they were hoping that they'd recover from it. And then this happened, and they had another run on their deposits, and they had to sell them at a loss. So they basically decided that they just don't have enough assets left in order to continue servicing the market.
Yeah, I think the fire sale resulted in a $770 million hole in their balance sheet, I think I saw.
Yeah. So, I mean, that was the problem behind it. In all fairness, it's quite interesting because Silvergate hasn't done really anything wrong. The only probably thing they've done wrong is their risk analysis should have been slightly more adaptive to the new environment that they were dealing in. So they should have said, okay, if you're working with crypto companies, and having seen in the past, when the crypto winter sets in, loads of these companies suddenly need money, and they all need it now. So they should have thought about it and probably could have just held it in cash or just short duration T-bills,
Yeah.
which then would have meant that they would have taken less losses, I think. But I'm not the expert. This is what my understanding is so far.
Yeah, no, I agree with that. And I think that the crux of the matter is their failure had nothing to do with crypto per se. It was just the way they managed their deposits. They
Correct.
didn't account for the volatility and the fact that statistically, if there's one big depositor needs to get all their money out, a lot of depositors probably will, because there's something going on in that industry.
Yeah, but there's other theories behind it as well, that maybe it was nothing to do with the bank run. The bank run was orchestrated by the politicians and the government because they want to make an example. It could be just because of the FTX collapse, and they want to be, the Congress and the Senate need to be seen as doing something about it, or they're just trying to make sure that the crypto industry gets a bad name and they can shut down any actors or any agency or banks that are supporting it.
Yeah, I think it's been going along a bit like a wounded animal, really, since FTX, hasn't it? Because it did make the depositors whole, right? They didn't technically run out of money there. But I think the problem was that the depositors just never came back after FTX.
Yeah, and it's funny because they have not yet, at least, taken any help from the Fed or anyone else. So they've taken it on the chin. No taxpayer money has been
not that
used.
It's been offered. Funny
not
enough.
that, yeah. Of course, it won't be offered because of that reason.
Yeah.
So it's interesting turn of events, and it's funny. It's coming at the back of Caitlin Long's bank application being rejected, which actually was offering the exact solution to the problem we are seeing unfold in front of us.
Yeah. What's interesting to see was there's several congressmen and women yesterday openly smirking at, Silvergate going under, and they were so pleased. And then today, 24 hours later, not so funny, is it?
No, tell me about that one.
So it looks like Silicon Valley Bank is the next one that's got into trouble. They had a huge sell-off, $21 billion of their bond portfolio. They had to sell at a huge loss in order to shore up liquidity. Stock was down, I think, almost 60%, wasn't it?
Yeah, yesterday? I think they took a 60% drop yesterday. I think it's another 60% today.
Yeah. Yeah. So basically, it seems to just be spreading out a bit from Silvergate. A lot of the banks in the US are down today on the stock markets. But the interesting thing with SVB is that seems to be the bank where all the hedge funds and all these tech investment funds seem to bank in Silicon Valley. So
hence the name.
Yeah. So if that goes under, that could have some interesting consequences, which are quite hard to fathom. It's one of those things, until it actually happens, you're not quite sure where it's going to lead to,
If it does, it's going to be the second biggest US bankruptcy in history after Washington Mutual in 2008.
Interesting.
Yeah. So it's not a small fry. And obviously, if you look at the sort of capitalization of Silicon Valley companies, if they've been dealing with Silicon Valley Bank, it's going to be a big deal. Yeah,
it is going to be a really big deal. I know they tried to get a fundraise in, and the news a few hours ago was that fundraise has failed. So they've halted share trading in SVB for now. And I believe the employees have been told to go and work from home for now, which is never a good sign, is it?
Yeah, that always works. But yeah, you're right. I don't know how this chapter finishes, because it's just started yesterday with Silvergate, which seemed to be like it'll have no effect on any other banking institutions. But it looks like Silicon Valley Bank happened shortly after. Now, whether they were connected or they were completely independent events, we don't know.
Yeah. And that's not the only one. Then there was First Republic, isn't there? Down 30%.
Yeah, it's having its own fair share of bad news. So it's interesting. It's all happening, but whether that leads to Fed stepping in or not will be the one to watch, and how they step in this time. Because on one side, they are definitely, after listening to Jerome Powell the other day, he wants to come across as that he's not going to make the interest rates rises stop anytime soon, or nor is he willing to flood the market with any sort of liquidity. So
Yeah, and I mean, I think so. The Fed has been in a really tough position for a while now, right? But he's come out. Jay Powell and his crew have come out again this week, haven't they? And they're now gone very hawkish, and they're putting the 50 bips raise on the table again. But what do you think? Why are these banks under so much pressure? Right? There's two main reasons, I think. One is Powell is taking liquidity off the table, so they're really struggling with that. The smaller banks particularly are being disproportionately affected by that. And on the other side, you can now get 5% by just going to bonds, right? So it's less attractive now putting your money in a bank. So I think they're being squeezed on both ends.
Also, all the clever instruments that people had come up with, all these banks had come up with to get you returns are mute now, because if you can get 5% rate of return on nil risk, why would you invest in instruments, which was actually their bread and butter to a large degree after a point of time?
Indeed. And so now, what's Powell going to do, right? If he raises aggressively again, he risks this contagion spreading. And yet he can't lower. So it's going to be interesting to watch that one over the next few weeks.
Here's my question. I thought the whole point was that the cure for high prices was high prices. Yeah. Right? So why try control it? Just let the inflation run hot. That will kill the demand automatically, because if people can't afford it, they can't afford it. They'll stop buying.
Yeah.
Maybe I'm being simplistic here.
Well, I don't know. The other problem he's trying to, what he's trying to do is political suicide, right? Essentially, if you cut away all the bullshit, what he's trying to do is he's trying to make enough people lose their jobs, try and make prices come down, right? But you can't come out and say that. I mean, it's complete suicide, isn't it?
Yeah.
Especially after, arguably, he's the ones that caused the inflation by printing $5 trillion out of nowhere 2 years ago.
Well, they don't want to talk about that, do they? I mean, they just want to say, well, that had nothing to do with all this.
Oh, he's here
and maybe
to save
it didn't.
the day.
100%, it didn't. I mean, there was obviously you still have the supply issues. Energy is higher because of the war in Ukraine. There is an element of that, and COVID and the pandemic meant that the supply chains were disrupted for a long time.
You can argue how much of the inflation is due to that and how much is due to the printing, but
yeah, I think it's a combination of both. But he's not addressing either of them. That's the problem. The point I'm trying to make is that he's not addressing the supply side of things, and he's not addressing the fact that they've already printed so much money and flooded the markets.
Well, he can't affect the supply side, right? He only has one tool, and it's an incredibly blunt tool. So the question is, I mean, the thing is that we've been saying for, almost a year now, something's going to break, and yet here we are, and nothing's broken. So it'll be interesting to see what happens in this banking contagion, how big it gets, if it gets big at all. I mean, this could be over by tomorrow, right? Who knows?
So you're funny you say that, because we have been saying this for a while, that we don't know why nothing's broken until now, when we thought it would break by now. And I think surprisingly, Fed seems to be equally surprised by the fact that it's not breaking, and they're trying and it's not breaking. And because of that, the rates will keep going up. So the beatings will continue until the morale improves.
Yeah. It's a fascinating time to be alive.
Yeah. So let's see how this whole thing plays out.
The other point, though, that I think is worth mentioning, because sometimes I'm sure I come across as cheerleading for Bitcoin. And look, I love Bitcoin. I'm here doing a Bitcoin show. I'm here for it. But I think it needs to be mentioned that, look, the banks are failing and Bitcoin's down, 20% or something stupid. The whole point of Bitcoin is to protect you from bank runs, right? So I don't know who's selling their Bitcoin because banks are failing. It kind of blows my mind, but somebody's doing it.
I don't think it's people. I don't think so. It's individuals who are doing it. I think this is institutional side to cover their calls that they're having on their loans and what have you. It's got to be. Otherwise, the price doesn't move this quickly.
Yeah, you could well be right, but either way, the end result is the same, right? Bitcoin is doing anything but protecting you from bank.
Yeah, no, I agree, and I think it's not mature enough asset yet, and people have to understand that. A lot of people probably thinking, "Oh God, I mean, there was an interesting thought process this morning where somebody said that it's dropped 2%, but it feels like it's dropped 20%. The mood is so down in the Bitcoin space. And then mood is also an issue. People have to understand you will ride this roller coaster up and down when the price drops and price goes up, like you've never ridden a roller coaster before. So your emotions have to be really robust to survive this. The key is, if you can't handle the ride, fair enough, get off it. But if you can just buy and forget about it, you'll be fine. Honestly, you will be fine in the long run.
Yeah.
And it's a hard one to do. As much as I'm saying how important it is to do it, I'm equally been guilty of having panic attacks when I've seen the price drop in my previous years.
Yeah, I think there's a few roadblocks ahead still to get through. I think Powell, as we've just said, he's still very intent on being hawkish and raising rates. So while that continues, I think it's going to be tough for Bitcoin to go anywhere. And also, I don't know if you've seen, but so Grayscale is suing the SEC for not allowing them to have a spot ETF. And it looks like their case is going well. So potentially they might be allowed a spot ETF. So I don't know what that does to price. I think it could be bad. There's a lot of pent-up selling demand there in the ETF at the moment, and that would release that presumably onto the market.
Yeah.
So that's something to watch, I guess.
Yeah, no, I think there's a lot going to happen over the next year or so, because just the contagion never limits itself to one or two banks or institutions and what have you. I think there'll be more crypto companies and other banks that will suddenly show up having exposure to different sort of derivatives or products that they've suffered a huge loss on. So that'll all have a negative effect going forward.
Yeah. And this, I'm kind of glad they are taking the SEC to court, because it's ridiculous, their behavior. It's illegal in the US for the SEC to treat two things differently, okay? And essentially, so the SEC has been refusing spot ETFs, and they said you can have a futures ETF. That's fine because the futures are regulated. Whereas they're saying the spot price, the price of Bitcoin is coming off exchanges which aren't regulated. They don't trust it. They think it's open to manipulation. So here you go have a futures ETF, right? The problem is, where do the futures ETF get the prices from? They get them from spot price, from exchanges. So I think that, and the judge seems to be seeing this. He's like, well, there's no difference here. Either you disallow future ETFs or you allow,
or all ETFs, basically.
Yeah. Well, future. Yeah, exactly. So you disallow the futures and get rid of all of them, or you allow spot ETFs.
Yeah.
So they haven't pronounced yet, but that seemed to be the way the questioning was going. And the SEC lawyer did seem to be he seemed to be a bit flustered. She didn't seem very pleased with it all. And
Grayscale's discount has been reduced, hasn't it? It's down to, I don't know what to check yesterday. It was 30%, I think.
Was it? It's still pretty significant, though, isn't it?
Significant, yes. So, yeah. Okay. Now, interesting space. I think all this is going to tie in quite nicely over what happens over the next few days and weeks. And I don't think so it's going to stop here.
No, and just the final point on the sort of roadblocks ahead for Bitcoin, I think, is, I don't know if you've seen, but the US government is moving Bitcoin around. So about 40,000 Bitcoins from US government associated wallets have been moving around. Now, these are coins that were seized in law enforcement procedures. The majority so far seem to be just internal transfers. Maybe they're reorganizing the wallets or something. However, there's almost 10,000 Bitcoin that have been transferred to Coinbase. I believe they're the Bitcoin from Silk Road. So that's going to get bumpy if they dump 10,000 coins on the market.
Yeah. And it'll be quite interesting to see what the motive is for doing it now. Because that's the other thing you'll notice in this space, if you're not familiar with it. Just moving big numbers of Bitcoin around from one wallet to another, panics the market.
Yeah. Or I'll tell you what else panics the market is dumping 10,000 on the market. Yeah, doing it, true. Right? So
true.
Let's see what they do. with that. But I think that'll be a huge mistake for the US if they sell coins off at this price. But I mean,
yeah, I mean you're saying that from a point of view where you're thinking that governments should have some Bitcoin in their own treasury. But if the US government's main objective is to make sure that Bitcoin doesn't become a treasurable asset, then obviously it's right up their street.
Yeah, good point.
What next? We talk about gold as well. I mean, it's a Bitcoin show, but we can discuss gold briefly.
Yeah, we like gold, don't we? Yeah, go on. Tell us more. What's going on?
No, just an interesting thing about came out of Australia, the Perth Mint, which is one of the historical mints, and that supplies gold to government level, central banks, and what have you. They've just facing a potential that they might have to recall $9 billion worth of gold bars that was sent to China because they had been what they call slightly diluted, which is called doping. So they didn't meet the Shanghai Gold Exchange's strict purity standard. So that was quite interesting. I mean, I think at some point in time, they all do it, but not to this extent. And I think the extent got bigger and bigger, didn't it?
Yeah, I think it was this comes back to, again, a complete failure of management, right? What they did, so like you said, so they decided to dope the gold, which apparently is an accepted practice in the gold industry. So most indexes want a minimum of 99.9% purity in the gold. The Shanghai index is slightly more pure than that. So what they do is they add slight little bits of silver to the gold in order to save on money, but yet keep it above the 99.9. The problem is the tolerances are so low, you've got no real area to play with there before you get into trouble. And that's what happened. So this is the thing that just blows my mind, right? So the Perth Mint, they've been going, like you said, one of the oldest mints in the world. I think they've been going for like 128 years or something silly like that. They sold $20 billion of gold last year, right? Do you know how much money they saved with this little stunt of theirs, doping gold?
Go on.
$600,000.
Is that it?
$600,000. So by saving $600,000, they're now facing a $9 billion recall. It blows my mind how these people run these things.
Not just 9 billion. I mean, their reputation is dust.
Tatters, yeah. Because not only that, but of course they then went and covered it up, right?
Yeah.
Because it turned out that some of their the bullion they were sending out was quote unquote red flagged in the Perth Mint, and they decided to keep that to themselves and not tell Shanghai about it.
Yeah, that's the problem.
$600,000 on $20 billion worth of sales.
I know, it's shocking, isn't it? It is very shocking. It'll be interesting to see how they fare out of this now. Because, but thankfully, you don't have that problem with Bitcoin, do you?
Exactly right. Super easy, isn't it?
Yeah, it's always pure. It's always in the wallet that it's meant to be, and it just works. You don't have to check its purity. The miners and the nodes do it for you.
It's free to check.
Yeah, exactly.
Everything is checked.
Yeah. So that shows another reason why gold is getting archaic now. But a lot of the central banks don't seem to think so at the moment, do they?
No, so there's been a huge change in the central banks, hasn't there? So the 1990s and the 2000s, central banks were just selling a lot of gold, right? They were selling hundreds of tons a year. In fact, didn't Gordon Brown famously sell most of the UK gold at the market low?
Yeah.
Well, that seems to have turned around, right? So now central banks are adding big style to their stockpiles of gold. So they've added a huge 1,136 tons of gold. So that's about $70 billion worth in 2022, which is by far the most in any year going back to 1950. So I think this is a case of watch what they're doing, not what they're saying.
Yeah. Do you see the world reserve currency dollar being slightly challenged here?
Well, I think when you look at everything that's going on in the world, if I'd been a central bank, I think it makes sense to stock up on gold, doesn't it? Because you don't know where this thing's going.
No, and I think people are also realizing that the Fed is up to some games, and that's not going to end well for their central banks and their national monetary policy. So backing it up with gold is probably not a bad option.
Well, yeah, and of course, there's two things going on here, haven't you? First of all, you've got the large debasement that's going on with the US dollar, but second of all, you've got what happened with the Russian reserves when Russia invaded Ukraine, and all of a sudden, all their bonds and reserves were just halted. They were just confiscated overnight, and so the US has a much bigger problem doing that with gold. It's very easy to do that with bonds. You can't do it so much with gold. And I think they've weaponized the USD so much that I think central banks around the world are they're not looking at it as an asset anymore in the way they used to. And I think we're probably going to see that replaced by gold further as we move forward.
Yeah, I think they're going to use that as a way of just doing exchange outside the US dollar standard as well, with between two countries. Yeah. Now, okay, so we think gold is dead, but central banks are buying gold, but that space is evolving. So let's see where that goes.
Also, I don't think gold is dead. It's funny. So I've been thinking, should I diversify a bit or not? And I do think gold is probably a good investment in the short to medium term. I think ultimately Bitcoin wins, and I think it goes much higher than gold will ever go. But in the short to medium term, central banks aren't going to buy Bitcoin as much as we'd like them to. That's not.
Yeah, they won't.
In my opinion, I think they're going to buy gold, and we're seeing it.
Yeah.
But you know what? I just struggle to pull the trigger. I just struggle to buy gold when I know how much superior Bitcoin is.
But also, I think at an individual level, the security you need for gold, the difficulty in portability, the bulkiness of it to have, and the access to gold. I mean, sitting in big cities like London, what have you, yes, you can go down to the mint and buy some gold, not a problem. But not every country has a mint which can sell you gold on order, So it's not easy for most people to get access to gold, firstly. Secondly, how do you store it safely? It's not easy to keep it safe. So when you look at all those issues with it, you suddenly realize, and you can't take a lot of gold out of the country if you need to leave tomorrow because war's broken out on the borders, and now you have to certainly take whatever you can. Whereas Bitcoin, you don't have those issues. It's secure in your wallet. You can have various sort of setups for it, and you can just put that USB drive in your wallet, in your suitcase, and leave the country with as many Bitcoin as you want.
Or burn it all together and remember 12 words. You can cross borders, start bollock naked. But, the point is that all that is absolutely correct. But I still think gold will probably do okay.
Yeah.
But I just can't get excited.
Well, that's what I'm saying. So central bank side, it makes sense because you're backed by the army, you've got the vaults, you've got the infrastructure in place to store gold. The governments will obviously store gold. It makes sense. But on an individual level, I think, it's very difficult to buy gold.
Yeah, I agree with that.
Okay.
Talk about another shitcoin then, shall we?
Oh, go on.
Ethereum.
What about it?
So the New York Attorney General has just sued an exchange called KuCoin. Never heard of them before, but there we go. They're being sued by the NYAG for selling securities, one of which includes Ethereum. So here's an interesting thing. Her arguments for why Ethereum is a security, see if you've heard these before, is an ICO from the ETH Foundation to fund network development. 2, shift from proof of work to proof of stake. 3, promoted as an investment on ETH Foundation website. Wonder where we've heard those arguments before.
Yes. Oh, by the way, just to add, do you know how many Ethereum are pre-mined, by the way?
70%. 70.
Yeah.
It's I get excited about this, and not in a good way, because it just comes down to ethics, doesn't it? I mean, you hold 70% of the coins you've created for free, and then you go out there shilling it left, right, and center. I just think ethically and morally, it's just wrong.
It's just to make a few people more richer than they need to be at the expense of everyone else. Simple as that.
And the problem is, once you understand Bitcoin, you understand that the world really needs it. And when you look at coins like Ethereum and all the other shit coins, they just create so much noise. They make it so hard. They really slow down the trajectory, I think. So Yeah.
I compare these coins to derivative products that banks offered. They try to obfuscate the actual signal by creating so much complication around it that the most average person just says, you know what, I have no idea where this, how to deal with this. And either a professional takes over or they use the buzzwords that'll make sure a lot of people will buy into it thinking this is the next big thing. And Bitcoin has none of that. It just is simple. And the fact is, whatever Bitcoin were mined by Satoshi, I mean, they've never been touched. They've just walked away. They've just walked away from all their Bitcoins. And that's where the trust and the ethics comes in.
Yeah. And I think this could be big. I mean, again, we've been talking about this for years, but, I wonder if finally it's going to happen, if they are going to, because it is, I mean, my limited understanding of the law, it seems to be the very definition of a security.
Yeah.
All these coins do.
Yeah. Howie's
the Howey test. So are these guys going to go after them? I mean, it'd be very interesting to see what happens if they do, won't it?
Well, definitely. One thing is for sure that there is a lot of interest now in this crypto space from lawmakers and from police and Justice Department officials. Everybody is now looking at it with a much more beady eye now after the FTX collapse. And yes, it's not ideal for Bitcoin in terms of off and on ramps, but I think in the long run, it's going to be good because it's going to take down a lot of the malicious actors out there, hopefully.
I totally agree. If they do it, but I just have no faith in the U.S. government or any other government, really. So let's see what they do with it. But it's definitely going to be an interesting storyline to follow because they could really end up in some hot water, all these coins, if the government goes through with this.
Yeah, true. We'll watch this space. Keep you posted.
Yeah, for sure. I think that's all I've got, really, for this. Anything else you've got?
Yeah, no, nothing else. Just minor news about bills being passed in different states. I mean, there's one which was passed by Missouri, which said they will keep the right to mine Bitcoin going. And then the last week, which we covered about the CBDCs, which some states were saying that we will only accept money that's fiat by decree of the government as to be considered as money, and that excluded Bitcoin. Now that's apparently been vetoed by South Dakota. So let's see. I mean, that's the positive side. So it's not a one-sided battle at the moment. It's not like the government is just winning everything they want to win on this. Yeah. There'll be fight backs, and it'll be an interesting space to watch.
Yeah, it will. Yeah, great.
But no, that's all I got.
Cool. Right. Well, let's see what happens next week.
Yeah, or tonight and tomorrow. I mean, things are going to happen very fast. But
that's the thing with these bank runs, right? I mean, boy, do they happen quickly when they get going.
It's funny though, it's Friday today, so it'll be quite interesting to see what happens on Monday morning because over the weekend, everything goes quiet, but lots happening in the background.
Yeah. So. Yeah, stay tuned.
Yes, thanks for listening and see you next week.
Bye.